Good morning, everybody, and welcome again to another one of our Wealth Tech Talks. Today we are in conversation with a couple of gentlemen from Contemi Solutions. We've got William Rouse, and William is Director of UK and Europe, and we have Amrik Sanghera, who's a Senior Solutions Consultant, both based in the UK. So, gentlemen, I'll just pass you over to you quickly to do a quick introduction to yourselves. Cool. William first, if that's okay.
Absolutely. William Rouse, Director UK and Europe. My role is new and existing business expansion for both wealth management and insurance solutions.
Perfect. Thank you, William. And Amrik, for you?
Yeah, so I'm Senior Solutions Consultant here at Contemi, mainly for UK and Europe, but also operations in Asia. And that mainly matches client and prospect requirements to our systems and modules.
Perfect. Thank you both. So for the purposes of the audience, we're going to speak today to William and Amrik about Contemi. A little bit of a background to the business, what they do, where they came from, kind of clients they service, a little bit about their recent acquisition, I think. So Contemi buying the original Dion business. Then we'll talk much more about the business and solutions set today, and talk to the guys about what they see happening in the market and a view on where the wealth management sector is going. So we'll be talking, I think, for 45 minutes or so with the guys, hopefully getting a good overview of the business and their thoughts on what's happening in the market. Any questions that come up, we'll answer at the end. So, guys, what about a quick introduction to Contemi? What can you sort of tell us from a headline level of who you are, what the business does, and where it maybe sits in the market?
Okay, so Contemi, the wider organisation, are a market-leading provider of technology solutions to the global financial service industry. We provide software and digital solutions for the insurance market, wealth management market, banking, as well as the capital markets. In this instance, and obviously the most relevant, of course, would be the area of the operation dedicated to wealth management, as well as the private banking world. We provide an array of solutions covering the front, middle and back office functions. These solutions come in the form of data and system agnostic modules, which are designed to be, one, easy to implement, two, cost effective, and three, very simply to complement and enhance your existing universe. So we give firms the option of utilizing our entire suite of solutions, that's front to back, or we simply allow the piecemeal approach, whereby clients pick and choose the most appropriate pieces of functionality for their existing setup, as well as their future target operating model.
Okay, perfect. What about the origins of the firm? Can you tell us anything about where the firm started, how it's evolved over its lifespan?
Yeah, cool. So I'm sure there's many people watching now who know who we are. Certainly when you said Dion Global earlier. So we've been active in this space for over 25 years now. That's under different names and different guises. So the most recent was Dion Global Solutions, which many people will know. At the very core, the fundamentals remain largely unchanged. That would be to provide robust, scalable solutions to a vast array of firms, both big and small. Until around 8 years ago now, we were just facilitating full front to back office systems to a certain size and certain scale of wealth management firm. Fast forward to now, and we're providing modular and modular-like solutions, which I'll touch on later, to a much wider range of clients. So one example of this variety would come in the shape of our most recent client win, who are in their own right a financial technology firm. These guys provide stock lending facilities to the IB market. So we're constantly seeking new types of partnerships, certainly partnerships of this nature, be it with market infrastructure providers or even competitor firms, whereby we enhance their offering through white labeling of our solutions.
Perfect. And I don't know whether you can say anything about the background to the deal. So for Contemi buying the Dion business, maybe what the rationale is, or at least what that means for the business going forward and its client base or future client base.
Yeah. Absolutely. So I suppose the buyout by Contemi and in turn Triple P Capital mean a number of things for clients. What it means really is increased resource for product development, as well as a dramatically enhanced support structure, increased product investment and input really at all levels. I think one of the things that existing clients are going to start to notice, and that's that their account managers or stakeholders are going to adopt a lot more of a consultative approach at a more strategic level. And not that we haven't done that in the past, but we're driven by relationships for the longer term. So how do we achieve that? That will be by continuously enhancing our offering based on the consultancy that we get from maintaining much tighter relationships with our clients. Certainly the goal, I can say, goal coming from the upper echelons of the organisation is to certainly have our people thinking like our clients and not thinking like a service provider. Not necessarily, thinking how about how do we manage money for them, but it's really about what we want to do ultimately is start challenging our clients to start thinking differently about their businesses, how they can run them a lot more efficiently, and how we can in turn fit into that.
Perfect.
I think just to add to that, Will, actually, it's kind of the acquisition has certainly propelled us into, what I would say now is a global fintech company. So we are sharing resources across multiple continents. So our staff count has grown to well over 250. We've got now with the acquisition around 55 clients globally. And now those development centers are across multiple time zones. So what it's really allowed for us, like Will mentioned, from a support point of view, we can offer around-the-clock support of our modules, especially in wealth management. But also from a development resource, we're sharing resources. We're gaining market trends, not just from the UK and Europe, but also from Asia now, which allow us to kind of, what I like to think is provide a solution for wealth management as a whole, not to be held down by a geographic region, which who knows, UK might go the way that Asia's going, or Asia might go the way that UK going, and to have a solution in both parts of the world allows us to fuse those to provide an offering that's in unison.
Perfect, guys. Thank you. You've touched, obviously, the wealth management industry is a fairly diverse space, and you're working in multiple geographies. There are many different types of firms. I think Will earlier mentioned you might have worked with a certain type of firm before. In terms of where you are now, can you tell us a little bit about the types of wealth managers that you work with, big, small, certain type of product set, and maybe a little bit about why they work with you, so what their needs are that started those conversations?
Cool. Yeah. So our bread and butter, if you will, has always been discretionary managers, traditional stockbrokers, so on and so forth. And we do continue to service those types of clients to this very day. Certainly over the last 5 years, we've started to cast our nets a little wider, and certainly with the new backing from the guys at Triple P, it's enabled us to develop services and solutions to a wider audience, but a lot quicker than we would have been able to before. With that in mind, we've started now to engage with a variety of market participants. We find that there's certainly a lot more meshing of services across our client base. And what I mean by that is that predominantly pure discretionary players are starting to foray into the planning space. I suppose the angle there really is to make themselves a lot stickier to their clients. So the type of clients that our services now appeal to, compared to before, has increased dramatically, particularly around financial planning. And then we have things such as our latest client win, which I mentioned earlier, a technology company in their own right. And that's really a show of the times. These firms pride themselves on the technological efficiencies that they bring to their clients, and the fact they're able to collaborate in such a way really is telling of how far we've come in a relatively short space of time. Another thing I think Amrik will probably touch on this as well is that we've also got things like our corporate actions module, which can travel across the entirety of the financial services market. So certainly opened up our wider market reach, that's for sure.
Yep. Amrik, I know, would you like to follow on from that?
Yeah, sure. So, I mean, at a very high level type of organizations, we've got some existing clients that are on the lower end of the tier one space. Bread and butter is probably tier two, tier three. And they range from, wealth managers, asset managers, stockbrokers, and we've got individual players. And I think being system agnostic allows us to certainly compete with the tier one space, because there are some gaps in functionality which we provide, which standard full front to back systems may not. And then also from a tier two, tier three, they can take our whole tech stack, which allows us the servicing of full front, middle and back, right end to execution. So I think that's kind of the way we position ourselves. With the modular approach, it certainly meant that we're more flexible with the types of clients. So family offices now, which before probably weren't on our radar, now are, as well as other providers, etc. So it's certainly a new era for us in what we're targeting, but we've also got our existing client base, which kind of helps back that up.
Great. When you talk about, you've obviously touched on a few things that might reference your value proposition to the market. Perhaps it's a changing one compared to where you were historically. If you were to describe Contemi now and what differentiates you from your maybe some competitors in the market, how would you describe the business? What would be that packaged description that you would say Contemi is now for the market and its clients?
Okay, I believe that I'll tell you where we want to be the leading solution provider in wealth management, and it can be quite a bold statement, but I believe we have the majority of the components there to kind of fulfill it. So from a front office point of view, we've seen a massive trend in client lifecycle management, relationship with your clients. COVID-19 has certainly taught us one thing, that you can't meet face to face with those clients anymore. So our value proposition there is, the ability for you to onboard clients digitally. They can self-onboard. So you're gaining your business on one end, allowing your communication points with those clients. Wealth managers have tell me time and time again, I need a reason to pick up the phone and talk to my clients. Whether it's market movements, whether it's someone's birthday, having a system that captures all that information and displays it in a way that notifies you of the importance of it allows you to keep that relationship flowing and keep you managing that client's money for a longer period in time. Now, that's the capturing of the client and the movement of the client. We then kind of go into the actual servicing of the client. So whether it's asset servicing for a private client business, whether it's fund management business where they have to manage the portfolio of the fund, it's the ability to what we call manage a portfolio. So it's the creation of trades, it's the transfer of assets to and from, the ability to rebalance a portfolio against models. The idea of automating clients' portfolios now, where we're moving away slightly from the bespoke managed clients and we're trying to automate as much as possible within an NPS. We then go into fee management, fee processing. We need to be more creative with the way that wealth managers charge their clients. Before you used to have a rate card with potentially 3 or 4 fees and that would be it. Now we're looking at, different service types, advisory, discretionary. How do we charge that? And having a flexible fee processing engine allows us to categorize fees and charges across multiple different clients in an efficient manner.
Yep.
And then we go more into the back office, which, as many firms will know, we've been around for 20, 25 years, and the back office system that we've had has been with us for the main majority of that. But it's not just a book and record system, it's tax management, ISA management, the ability to, with our new award-winning module, corporate actions, automate corporate actions from diarisation right through to processing with election management, especially with SRD2 around the corner. And then the final bits and pieces, what do we do with all this data? And I think where we differentiate from the market in some ways is we are data agnostic and we are truly system agnostic. So our last 2 client wins have been our solutions sitting on top of a client's other back office system. And I think the proposition is all around data. It's how we have our open API architecture to process this data. And the final module, which is analytics, I guess, is the overarching management information, business intelligence. We're taking data in from a multitude of different platforms, different providers, but we're providing that holistic view. And if we can do it with data, we can certainly do it with transactions, and we can certainly interoperate with other systems as well. So I guess that's what I think how we differentiate. And certainly with our Asian focus as well, we're starting to learn a few trends, and some of the development that's coming out of Asia at the moment is something that I certainly think is slightly different to what the UK is offering right now.
Yeah.
Thank you. Will, yeah.
I suppose kind of leading on to that, our offering to the wealth management market is very simple. We operate something called the Wealth Intelligence platform, sorry, the WIN platform. You can sort of guess that we didn't really take much time naming that, but the WIN platform consists of is a number of a vast array of modules, which are, like Amrik alluded to earlier, system agnostic, data agnostic. You know, there's 18 of these things. So from client portal to modelling, maintenance, client onboarding, all the way down to corporate actions management process. So we operate and maintain an open API ecosystem, industry buzzword, which I absolutely hate using, yet have to do it all the time. This allows our world to evolve alongside our clients. So all those connections, all those third parties such as data providers, custodians, trade fees, so on and so forth, they will fit into our universe alongside our clients. The beauty of our offering, and one of the potentially misleading things about the word platform is that you don't have to take the whole package, so to speak. Like we've alluded to earlier, we're very much a supporter of the modular / best of breed approach, as well as the big bang approach, whereby you just go to one service provider. So we allow clients and prospects to select these chunks of functionality and technology to, I suppose, fit their immediate and long-term needs. How we develop on that for the future is a very good point. From a personal perspective, I'm really keen on building more relationships with platform providers, market infrastructure providers, and dare I say competitors, because ultimately the more in sync and more interoperable, again, another industry buzzword, sorry, that we are with these people, the more the client prospers. The market as a whole should have taken this approach years ago. We should be able to talk to each other a lot easier, a lot simpler, and a lot quicker, because ultimately it's for the benefit of the client. If we, there's going to be things that we do better than our competition. There's going to be things that our competition do better than us. My boss will absolutely kick me for saying that, but if we can provide, say, a perfect solution for because every client is different. If we can provide a perfect solution for each of those individual clients, be it 50% of our stuff with 50% of someone else, then why wouldn't we be doing that? Why wouldn't we make that easier?
Understood.
So to ramble on a bit there.
No, good. So in this sort of modular offering, API based, so it's interconnected with other systems, it's data agnostic, it's platform agnostic, etc.
Yep.
Can you tell us a little bit about? I think Amrik, you mentioned one of the modules earlier, and perhaps two of them. Can you tell us what's most popular right now among clients? So what is it that sort of clients are most attracted by, or but most in need of in terms of the setup you have right now?
Yeah, sure. So again, with the pandemic that we're currently experiencing, there has been a particular drive towards the industry buzzword client lifecycle management. So how are they getting clients through the door? How do they initiate sales campaigns? How are they going to gain traction and grow their AUM and grow their revenue in times where in historic you'd meet a client up in the city at the Ned or the Starbucks, etc., just to take them out, and now that's impossible. So it's the ability for you to capture that client information. So we've certainly seen a trend, if you like, of self onboarding, automated onboarding, client lifecycle management. How do I talk to my clients? Do you have WhatsApp integration? Do you have Outlook integration in order to communicate with them? We've also seen a trend, and again, this is probably on the flip side of it, and it's just mainly around automation. These firms have been working office-based lives for as many years as you can remember, and having to work from home, they've probably identified themselves certain operations that previously just worked like clockwork, but now that people aren't in the same room, now that people are in different households, etc., they're finding it quite challenging in order to process it. So one thing that we're identifying in the market and what we've seen is people are looking for automation. Now, whether that's something simple as trade automation, sending trades directly to brokers and getting fills back, whereas before you had a dealing desk of 5-6 people who could pick up the phone and they could go, I'm dealing the Marks and Spencer's one, or I'm dealing the HSBC one. That's obviously, and then coming around the model rebalancing platforms, we're seeing a lot of people now moving towards an MPS.
Yep.
To move away from bespoke management because of time and resources, but also due to the mass amount of regulation, which I guess is always on there, is how can we manage these clients in an effective manner when we've got to quarterly report, when we've got to disclose all our fees and charges, when we've got to transaction report every single transaction. There's a massive burden, especially for these smaller firms now. And I think that the trend that we're seeing certainly is, they'll come to us and they'll say, well, I need this automated. I need to be able to talk to my clients digitally now. And I guess that's the kind of areas where we focused on. And luckily enough, we've had solutions in place to provide the market with an offering. But it's certainly over the past 2 months, we've probably been busier now than we were for the same 2 months last year, which is a sign.
Great. I'll come back to the sort of industry efficiency piece in a minute, and I think touch on things like sort of outsourcing. When we spoke previously, and you talked about client lifecycle management, I think you talked a little bit about the client portal module. In times now, I think you've said that you're able to strip back technology to give the market what they need when there's times of stress. So I think in previous conversations we've talked about a new client portal you've delivered to the market that is meeting some of the specific COVID challenges that firms are facing. Can you tell us a little bit about that?
Yeah, absolutely. So people that know us will know we have a fully fledged client portal, which is functionally rich, and again the main ethos behind it, very simple one, certainly from a user experience perspective, and that's we don't want clients to be any more than 2 clicks away from where they want to be. Now, one of the things we developed early March, when, not saying we saw this coming, but the signs were all there for some sort of lockdown was going to be happening in the UK. Italy and Spain obviously were in a much worse situation than us at the time. So we thought, okay, there's going to be a lot of stranded clients around. And there's a lot, you'd be surprised, and I've noticed, having kind of conducted this research firsthand, is that you'd be surprised the amount of firms out there without any real online presence. And what I mean from that is no real client engagement tools like a client portal. So we took our main client portal and we stripped it down to a very kind of like a dumbed down version, really. But the mindset behind it was, okay, we want to speed the implementation so we can get you up and running within 10 days. We want it to be as light touch and simplified as possible. So again, never more than 2 clicks away from where you want to be. And not only that, the ability to use it on the move. So you can use it on handheld device, PC, so on and so forth. And this would all be in a very cost-effective way, because not only that, it was a time of sheer panic because we didn't know what was going to happen next. And, some of these smaller firms must have been operating on very tight margins, and they just would have potentially run for the hills. So we tried to make this as cheap as possible for people. So it's, again, a very standard implementation and a very standard module, but certainly been very well received. And one of the good things about it is we can add to it as your expertise evolve. So what we're trying to do is it's kind of a learning process, really. We're trying to teach these people that, okay, this is something that you should be doing. If anything has forced the hand, it's going to be COVID-19, that's for sure. And yeah, as you evolve, as you start looking at things, you think, actually, well, it'd be nice to have this in there. One client asked for that the other day. It'd be good to kind of this in there. So we have the ability there to add to that light functionality as and when you, as a firm, decide to take that further step.
Great. Well, I mean, I think we've touched a little bit on trends already in so far in the conversation, but if we can go in a bit more detail now. Obviously, we live in an evolving world. We've got COVID. There are regulatory challenges. There are cost challenges. There are client challenges. There's all sorts of things that firms are facing. So when you talk to clients, prospects, and maybe others in the market, what are the kind of, maybe we can identify 3 themes that you think are driving change in the wealth management space, or keeping COOs, CTOs, CIOs, CEOs, and others up at night? What would you highlight?
Sure. You better say something. I'll need it.
No, go on, mate. You were raring.
Yeah. So I think the first one you mentioned is cost of regulation. So MiFID II, I know it happened just over 2 years ago now, but the quarterly valuations, the 10% drops. I mean, I was on a webinar the other day, and a firm in the city, which will remain unnamed, spent, I think it was £250,000 on stamps, just offering 10% depreciations during the slight market crash we had in market. So if there wasn't alarm bells ringing to, have a client portal, to have a document distribution, to have, e-distribution of any form, signs are there where the cost of the regulation of a big firm is, in my opinion, quite large. We then start going down to the smaller firms, and previously where you had potentially 2 people in an operations department, or 2 people in the compliance department, it's grown threefold. Everything needs to be audited, everything needs to be disclosed. Costs and charges are a sign of that as well. So us having the ability not just to keep hold of the existing regulations that are in place, but also with the ever developing ones such as SRD2, where we have a fully fledged solution already out in the market, and we have quite a strong compliance committee who attend all the webinars that are hosted by Pimp from Goodacre to essentially help make sure that we're ahead of the curve from a regulation point of view. So that's certainly a trend. Another trend which Will could probably mention on as well is we've been quite fortunate to be a part of a number of RFIs and RFPs recently, and we seem to have noticed a trend going from what would be more discretionary-led mandate to advisory and certainly financial planning. Will, if you want to touch up on that. And
yeah, just like I alluded to earlier, just the meshing of services. So again, if it's one thing that we've always been at danger of over-regulating ourselves in this industry, and if it's one thing that affects instantly, it's going to be the smaller players. Yep. Offering these specialist services, such as a particular type of discretionary management or a particular type of financial planning to clients. So I suppose some of the bigger firms are indeed looking at broadening their horizons, where they've been, say, traditional stockbrokers for years and years and years, now looking at adding another proverbial string to the proverbial bow, and again making themselves more appealing to a wider audience. One of the strange themes I've seen is that I was speaking to a manager the other day, and they actually started meeting clients in parks, which seems very nice. Maybe the kind of the big steak lunches are now picnics. I don't know, but it's certainly going to be a lot cheaper. And I think what we're potentially in danger of doing, and I think you could say from a wider perspective, is that we think this is all over and done with and everything's going to return to normal. It's not going to be the case at all. Again, I'm no expert, but if you look at this is changing people's mindsets. Just things like stepping into a restaurant without washing your hands after touching the door. They're going to be things that are completely at the front of your mind. So what does that do for a lot more of, I suppose, people's senior clients out there? Do they want to get out and see their advisors as much? But are they able to actually, do they have the ability to now go down this new road of, say, using a client portal? Do they have a handheld device which it will actually offer those capabilities? You don't know. So that's what I meant earlier when I was saying about stranded clients, because I think a lot of people are tending to forget about these people. What happens now with them? Another theme as well, which is recurring, and I was speaking to a good friend of mine who manages money the other day. He was saying we're behaving a lot more like mentors now, whereby we're having to do a lot more hand holding than we've had to previously, and I completely get that. This isn't like any other recession, like say 2008. No big crash. It's no kind of these things. But this is completely unique in just about every single way. And the ramifications aren't really clear just yet. So there's going to be people out there that will be licking their lips with all the value that's around. There's going to be others which are going to be battening down the hatches and maybe not taking advantage of some of that value. And for managers to manage all those emotions within their client base must be very tough. And if you can have something which will make that job a lot easier, what I mean by that is, say, something like a client portal Lite, add a smattering of what if analysis or something like that, and you do potentially have the tools there to manage that to an extent. ultimately there was always going to be emotions that you're not going to have complete control of during times such as now.
Yep.
But there's just to kind of name a few themes there. It's strange, very strange.
I mean, just on that, Will, I think the digital channels is quite interesting because, I mean, you and I and Stephen as well, we've all been to the compliance conferences, the events in the city, and there seems to be a massive trend around millennials. You know, how do we capture that next line of business? And if one thing COVID-19 has provided us is we need to learn how to communicate to our clients in different ways. You know, when you can't do the face-to-face meetings, which many of these millennials won't, because they're, you know, I'm one of them, and I'm constantly on my mobile device and my iPhone. It's the ability for me to contact my advisor by WhatsApp, the ability for me to receive my documents digitally instead of having to receive them via the post. And I think certainly from a communication channels point of view, it's helped. The point I alluded to earlier about, you know, advisory and financial planning, discretionary management, certainly from a cost and a risk mandate, is huge because you're obviously handling all the risk. But the next generation of investors, from what I've led to believe, it seems to be a little bit more execution only stroke advisory, where you can give me advice, you can certainly give me a mandate, but I'll be the one making the decision. So again, like Will mentioned, some of these full-time discretionary players are having to digress their offering in order to capture that next part of the market. And their systems may not have the tools for it. You know, when it comes to execution only, just the ability for a client on a client portal to make their own investment, like a Hargreaves Lansdown, would be a massive, huge offering where they can just make the transactional commission, and the risk of, you know, losing that client or the cost of managing that client is minimal. We then have the financial planning route, which is, you know, I want to save up for my daughter's wedding. I've got goal management, life cycle management. How do I get to that goal? And it seems to be a lot more of a hand-holding process where you provide advice quotes. There's a lot of documentation. And, you know, like I mentioned with the stamps earlier, the ability just to generate bespoke client reporting has been a trend that we've seen. You know, whether it's tax packs, quarterly valuations, costs and charges disclosures, fully branded documents that are digitally created so you don't have to check every single one because the data is all there, and distributing it electronically or even sending it to a printer. That helps various touch points across the investment life cycle. And one thing that they're learning now when they're not in offices, etc., is that investments life cycle, which was seemingly easily to manage before, when people aren't all in the same building, is difficult. So again, automation, document generation, client engagement seem to be the three key areas that we're noticing trends in at the moment.
Okay,
absolutely.
Listening to what you say, thinking actually it seems that the market struggles to service its existing clients, so it shouldn't necessarily get too far ahead of itself and thinking about the next gen, even if that is significant, obviously, for its future development. We talked about, I think, previous conversations, but today you've mentioned data. We talked about content. And to engage the future generation, you need data, you need content, and you need the tool set to deliver it. But the market's kind of flapping a little bit, I think, in that area. It's not set up. We'll come on to that again in a minute. But what is it? Are there certain things you recommend to clients now in terms of how they should improve their service and engagement with existing clients? I know you've talked about client portals, but are there sort of a clear set of steps that firms need to undertake to, I mean, £250,000 in stamps is kind of ridiculous, right? It's a nice, definitely a hammer to hit them over the head with in terms of something that shouldn't really be happening anymore. But are there clear steps that firms should take to improve?
I think it's, first of all, make this solution engaging. So, you know, a client portal, ensuring that it has all the information an end investor needs. I've got, you know, several client portals. There are some that I favour more than others, not because the value of assets I have in each of them. It's just the user experience. How easy is it for me to gain my valuation? How easy is it for me to look at my performance? How easy is it for me to communicate to my advisor with the click of a button to say, I'm not too sure about this, when did it happen, etc. So it's usability certainly that makes it, you know, something that I think what we tell our clients, but also what we tell the market, is something that they should look into. And then the other bits and pieces are to make sure that you capture all the information. So certainly from a CRM point of view, firms are no longer looking at people as individuals, because again, another study that I read, that the majority of firms from a loss of assets point of view, it's mainly due to death. So not bad service, not even that. It's because you're losing that money from the next generation, whether it's their children, whether it's their spouses, etc., their wives. So the ability from a CRM point of view to capture that whole family tree can potentially convert what was an individual offer in an individual account into a family account, into a junior ISA. And then there's other bits and pieces which our CRM system provides, which we tell our clients is it's all about alert-driven management. When that junior ISA becomes old enough to become an ISA, you want to be there proactively saying, by the way, sending them a little holding note, which is completely system generated, that we're going to convert your account into a real ISA. It's those levels of engagement that really help firms in a digital age, I believe. It's not just so much knowing what information to display, it's knowing when are the right times to approach that client and communicate. And that's something we tell all our clients, with all this data that they have, it's also about their relationships and how they manage them going forward.
Okay.
I think another point on that, and one thing I always say is just keep it simple. If you don't have a digital presence, if you don't have basically a client portal or anything like that, keep it simple. If you are going down that road, don't try and overcomplicate it. Don't try and run before you can walk, and don't try and offer someone who hasn't had anything like that in the past too much too soon. It's like anything, right? It's like when you first get an iPhone, you're not going to use every app on there. You're going to figure it out as you go along. And I think certainly one of the angles we've adopted with certainly the client portal Lite is that we keep it as simple as possible. We're not going to offer too much and too soon, and you sort of grow within your own capacity, if you will. And I've found it time and time again where people have tried to do way too much, way too quickly, and they just kind of work themselves into a hole almost, and not really focusing on what the core proposition of business should be.
Continuing on from that, so thinking that firms try and add too much complexity to technological infrastructure, and their planning and what they want to buy and what they want to use. I don't know, perhaps COVID's been good for a lot of tech firms in terms of the sales cycle and making sales a bit more efficient. What is it typically that blocks wealth managers from spending or improving technological infrastructure? Because a lot of what I hear and what you're reinforcing today is they're kind of a long way behind where they should be in many instances. Not every firm, of course, but a lot in the market don't have things that you would just expect them to have at this point in time. So why is that the case? What are the factors that are stopping them spending or improving?
I'd say it's resource. It's a resourcing issue from their side. If you look at it, if they are having a complete raft of huge overhaul of change, they're looking at, say, anywhere from 6 to 9 to 12 months worth of work. Really, if you're a CFO looking at the cost of that, and if you're a CTO looking at the amount of, or a COO as well, looking at how much resource is going to have to be applied to that project, your eyes are popping out your head. So that's the one immediate blocker. And like with all these projects, there is always a tendency to overrun. I might be the first sort of person working for a technology firm that would admit that. But pretty much every project overruns through some fault along the line from both parties as well. So it's assessing your readiness, one on paper, but your actual readiness once you've kind of got past that initial phase. The cost associated is always going to be huge. There's been projects in the past, huge projects in the past, and to this present day, which have gone way over budget, way over time, and have just kind of sapped resource from just about every single area of the business, which wasn't really planned to begin with. So the two kind of go hand in hand, really. That's one of the reasons I think we took the executive decision 8 years ago to, okay, look at this full front to back office system. How many? It was a commercial decision. So if we can break those down into little chunks of functionality that can be implemented, within a month or within 3 months, then great. we're in the door quicker, and we can spread like wildfire once the doors open. And that's, but you're growing at your own rate. You're adding efficiencies as you go along. It's like decorating a house for the first time, or, you know, gutting a house and doing it up in one hit. It's kind of the same thing. You are feeling it out bit by bit. Make sure, you know what, we could bring an efficiency in that area, or we could do something better in this area. So that, I'd say the two blockers there, that's for sure.
Yep.
I think another one is just general fear. It's, you know, when you're set in ways of working and operations for so many years, just because it's okay then doesn't mean that there's still ways to improve it. But there's always fear about the unknown. You know, what if this system doesn't cater to every one of our needs? And sometimes it's true. Maybe the system does it in a different way to what you're used to. Maybe the system automates a certain procedure that previously was unautomated because of the way that we worked as an organization. One thing that I do quite like about the whole idea about it is we're quite good from a consultative approach. And by that, what I mean is we have a range of clients in different tiers. Some are stockbrokers, some are wealth managers. So in a consultative approach, when we provide software solutions, we won't just give you an out-of-the-box solution. What we'll do is we'll give you a recommendation on how it can be used. For example, you know, firm A calculates their commission this way, but firm B does it this way. And what it allows them to do is make a choice, because we tend to start this journey as being more like partners instead of solution providers, where we listen to them, we take on their feedback on board, and, you know, we host regular webinars, or, you know, before COVID, in-face meetings with each of our clients to understand where their pain points are, but also where their business is going. And that's where we've built our trends. It's not just from a prospect generation and, you know, what we're getting from RFIs and RFPs, but it's also the way our existing clients are moving. And I think having a solution provider that doesn't have an out-of-the-box solution, but at the same time, I don't want to scare people and say every implementation is bespoke, but allowing us to give them different flavors of how simple operations like a rebalance, like a client onboarding, like a tax pack generation can be done, gives them a choice to potentially correlate which one matches their business the most. We're not going to tell you there's only one way of doing things, because that would be naive, and there's obviously multiple ways to do it.
In this kind of consultative approach and thinking about the themes and the challenges the firms face now, what are they talking to you about mostly? I mean, you know, this is a rehashing of an earlier question, but maybe go into a little bit more detail. So, you know, your existing clients or prospects are coming to you now, and they're sending RFIs and they're asking for different things. What are their lead focus points?
One of them is a lot of firms at the moment aren't tied down to one custodian or one bank. They have a range of platforms. It could be, I mean, we had an RFI earlier this week which had up to 20 endpoints. And one of the challenges is that they're looking for a system that doesn't just communicate to one or two of them, but communicates to all of them.
Yep.
So it is all about data transfer. It is all about open API architecture, and, you know, with our ISO data feed and also our APIs, we can communicate to it. But the issue for our clients is consolidation of information.
Yep.
This information at the moment, our biggest competitor in the whole city, and it has been for, I mean, I can talk about the 6-7 years I've been working on it, but from predecessors and 20 years before it, is Microsoft Excel. If it can be done in Excel, the chances are we don't need the software to actually achieve it. However, our argument is the amount of manual effort, the amount of teams and teams that are working on reconciliations on a daily basis, or are working on custody positions and uploading files to various endpoints, is huge. And we'd much rather our clients, and, you know, this is words of theirs, not ours, they'd much rather spend time managing their clients, growing their client base, not necessarily doing the mundane operations which take up 90% of the time of investment lifecycle, but get 10% of the value.
Yep. So
that's certainly a trend we're seeing. You know, multiple custodians, multiple data feeds into a system. Yeah.
And is that a certain type of firm? I mean, I'm familiar to a certain degree with that in the kind of family office space, where the client will have their assets custodied at multiple institutions and advised at a certain level by a family office, and they want to consolidate it. But does it extend beyond that level of firm?
Yeah, certainly. So, I mean, family office is obviously the obvious one. A lot of advisory firms who onboard assets from because their main growth is transfers in. And what they tend to do is have quite an open approach where they will keep the assets at the custodian that they've been transferred in from.
Yep.
So they could quite easily, I mean, as new as one custodian every month, just based on the firm's assets that they're transferring in. So it's certainly changing. And also from a discretionary point of view, as firms look to grow, you don't potentially want to lose 1 million assets under management just because you're not willing to create a custodial link. And the chase for business and the chase for getting that assets under management and fees under management up are certainly making that decision from the investment managers to say, yeah, we'll take the business and we'll worry about it, whether the system handles it at a later point. And I guess what we're saying is take the business, because we have that API architecture that allows you to connect to a multitude. Because, I mean, the good thing about most of these custodial links and banks is they all require the same information, positions, valuations, timestamps, etc. It may be a different format from one or the other, but it's certainly, it's our bread and butter, and we can produce that data and output. So we tend to be noticing that in RFIs and scoring quite highly on it. The other bit, again, which I mentioned, which is it always will be a massive factor, and it is now, it is automation. I can't begin to tell you the amount of firms in the city that are potentially still manually trading with no RSP or DMA interface. The amount of firms that when they produce a client pack, they're actually manually inputting the data for each client because the performance figures are skewed, or the price information that they're getting back from data providers doesn't quite correlate. And even onboarding, I was had the pleasure of speaking to a firm about a month ago, and they told me that when they onboard a client, they enter in the client name 6 times.
Yeah.
So I was baffled, and I said, so how is it that you enter it in 6 times? Well, we enter it into our CRM system, our client portal system, our investment software, and then for PEP and sanctions, AML and KYC, we have 3 separate providers that we enter it all in. Yep. And I sat back and I thought, the room for error there is absolutely massive. And the ability for just a simple onboarding system to capture all that information, automate the KYC and AML checks. And I mean, fortunately, we had a sales angle because we do have that. But it just goes to show how much of the market are still, potentially doing these unautomated tasks, and where a simple software solution, which, Contemi or another firm can offer, which can certainly not just make it easier for you, reduce cost, but also reduce risk.
Yep.
And that comes to our corporate action solution as well. There are still firms out there who are manually creating a diary for corporate actions. And as we all know, the fear of missing or, incorrectly reporting a corporate action is massive for firms. There have been buy-ins going back 18 months now. And it's still, from elections point of view, there are people calling up 20,000 clients to say, would you like the cash or stock on a Rolls-Royce dividend? It happens every year. And I think for an action that happens every year, for us to still be potentially picking up the phone, it's an oversight. And I think certainly automation is something that we're seeing more and more of as firms continue to try and efficientize their operations.
And quickly on automation, do firms have a tendency to try and solve that problem themselves with internal resources or internal development, or is it something that you see more often outsourced or them working with third-party providers?
I'd say 3-4 years ago, firms were trying to do it themselves. Certainly, there were IT departments within certain firms that were trying to develop solutions in-house. I think with the regulation side that's come to it, it's a massive burden for firms now to continue to do it. And we've noticed a trend back to potentially the outsourcing, which is, we'll give the entire infrastructure to a Contemi or to another third party and get them to manage it for us. Because I guess there are ways that they can still automate procedures within a company via workflow management and so forth. But it's certainly, give it to a firm who solely do this. We don't have a platform. We don't run investments ourselves. We're solely a software provider. And it's something that we do day in, day out. And I think we've certainly seen the trend, and Will can probably touch on it as well.
Yeah, well, if you going back to the point that I referenced earlier, is our latest client win is a technology company themselves. So it was either when we first had these conversations, their options were either use someone like us or build something themselves. And fortunately for us, they decided to kind of go down the road with us, because they've identified that, okay, in order for them to build something that, you know, even starts to look remotely like something that we have, it's going to take them months. So would you rather go with a supplier that has that there out the box, fresh and ready, or do you throw, I don't know, however many man hours at something, you know, at your own cost, but not only that, the maintenance and ongoing cost as well. So for me, it's a no-brainer. If you've got people there, well, I'm supposed to say that, but if you've got people there that can do what they do and do it well, why wouldn't you use them? Rather than kind of speculate, really build something from scratch that really would be largely dependent on whatever current systems you have, be them legacy or you know, or your own proprietary systems. What would what's the obvious road to go then? I think that would be go with the experts, go with the people that have been doing this for years, can do it well, can do it quickly, can do it for more than likely a fraction of the cost as well.
Got it. So we just thinking of a couple of final questions. I wanted to look a little bit about the future of the wealth management space, and particularly the sort of technology-enabled marketplace. We've obviously highlighted some challenges and some changes. So it's more financial planning, there's next generation, there's maybe more outsourcing, but they're still challenged by maybe a outdated infrastructure, issues around how they engage with technology efficiently and don't take on too much risk, don't spend too much money. When you look at the wealth management sector, can you kind of summarize where you think it will be in a few years' time in terms of where it will have invested in technology, where it will have improved, and maybe some of the benefits it will have extracted from that journey?
Yeah, I think, like I mentioned earlier, there's always been a danger we could kind of over-regulate ourselves into a bit of a black hole, certainly from the smaller company perspective. Going forward, I see there being huge emphasis on the end client experience. I always like to kind of use the restaurant analogy with this. If I go to a really good restaurant with really good food, but the service is absolutely awful, I'm made to feel uncomfortable, I feel like I've been insulted almost, there's no way I'm ever going to step foot in that restaurant ever again, no matter how good the food was. If I go to a relatively okay or good restaurant, but the service has been absolutely brilliant, I've had someone there really look after me and made me feel at complete ease, and I've had a really good time, I'm not going to think twice about going back. So getting on the point that Amrik mentioned earlier, people leave firms or clients leave firms for two reasons. One, they die, and two, it's poor service. It's very rarely based on performance alone.
Yep.
So I think going forward, the only real differentiator between firms is going to be the level of service that they offer to their clients. So you don't get me wrong, right? Going forward, there's always going to be people looking at past performance as a driver behind decision making, but the overall package will be the ultimate contributor to what clients will ultimately go for. Certainly around client retention as well. And we are in a time now where clients are getting smarter. They're becoming a lot more tech savvy, and they're being a lot more demanding. And what I mean by that is they have a lot more information at their fingertips than they did, say, 20, maybe even 10 years ago. And that all this information is there readily available to them. And Amrik said, earlier about the kind of the lean towards the execution only piece. There's another strong argument for that. If I haven't got, if I'm paying, say, 6% a year, just a wide number, service fees to people, and they're not outperforming that 6%, I'll go and do it myself, thanks. So it's a really, there's all sorts of things. I think ESG is going to become the new normal. Again, speaking to a good friend of mine, and he'll kind of kick me for shouting this, but Jamie Dimon said the other week, ESG investing is just going to be investing going forward. So I think where we are a lot more of a, certainly the next generation, certainly my generation, a lot more kind of conscious of what they're doing to the wider world. And if that's starting now to marry up alongside performance, brilliant. If you're doing the right thing and you're making money, then why wouldn't you kind of go down that road and be a lot more conscious of it? So there, I think where the key focuses are going to be going forward, what you can do from a systems and technology perspective in order to make that transition easier. Just pick up the phone to either myself or Amrik, and we'll happily help you along the way.
Future is sorted.
Absolutely. Amrik, I don't know if you want to add anything to that.
Yeah, sure. I mean, the good thing about this question is you could ask 10 different wealth managers at 10 different firms, and you get 10 different answers, because no one really knows which way we're going to end up in 10 years' time. I think from past experiences, and certainly some of the conversations I've had, that there is a massive trend at the moment in how our business grows their client base. So how do they get either investment within those clients already, so get multiple accounts, get their pension on board, get their ISAs on board, or how we get new clients onboarded to our firms. And I think there's certainly a drive towards the intermediary business, where some of our clients and some of our prospects are becoming almost platforms. So having IFAs that potentially hold their assets and you manage their assets for them. And with that, you want obviously a white labelable portal so they can contact their own clients, etc. And then it's the next generation. It's the millennials or the baby boomers or whoever it is that's actually going to be inheriting this next bit of money. It's what do they want to do with it, and how do they want to manage it? And whether it's digital tools, whether it's automation, or whether it's a little bit more flexibility, where they want to go down an advisory route where previously you had it, fully discretionary managed. I think there are all certain areas that firms are starting to have to digress their portfolios now, or digress their offerings to not be a one-stop shop and not be too niche. Certainly, they're offering a range of services. They're increasing services month on month to ensure that they capture as large a portion of the wealth management industry in the UK as they can.
Great. Yeah, absolutely. I mean, client experience is an interesting one. Sort of that technologically delivered or enabled client experience is definitely something the market needs to work on. So, guys, thank you for that. Quickly, a final question. So, where's Contemi going in all of this? What's your kind of role in the evolution of the sector? And maybe, is there something that you're working on now that you haven't told us about that we should hear about?
Well, domination. So really, our vision has been and is to be a leading supplier of modular front-to-back SaaS solutions to the insurance, wealth management, and capital markets, not only in Europe but in Asia as well, Asia Pacific. We already have a presence in each of these markets today, but our is really to be the leader in our field, and certainly what I've seen, and that's within a year now, is Contemi heavily investing in both product as well as sales and marketing efforts to help achieve that. So from an intrinsic perspective, that's always going to be our driver. What we do and what we can offer is, I think where our differentiators are, and we've touched on this earlier, is one, we are truly system and data agnostic. So we can sit on top of your existing universe if you want us to. Past that, I think one of the other differentiators between us and others is the expertise that we've learned from the clients that we have, and we've kind of not used them, but we've used the consultation they provided us with just by simply operating. If you've got something there which is your target market, why wouldn't you try and learn from them? Why wouldn't you try and learn from them to make yourselves more appealing to them as well? So they're our, I suppose, our two core strings. Amrik, I don't know if there's anything else you want to kind of add to that.
Yeah, so I can give a little sneak peek into kind of what's happening and what's coming out of the product roadmap soon. So we have a new banking and cash module. So again, looking at automation, how do we process dividend payments, cash withdrawals, cash injections, bespokely making the BACS files so that we can automate the payments. That's something that's going to be going to market quite soon. And then we've got a range of UX designs because, like Will said, we're really trying to gauge the customer engagement and client lifecycle management. and making our software as easy to use and look as good as it can with obviously white label of the firm's branding, etc., is something that we're looking at. And that's kind of in the short to medium term this year.
Great. Well, both, thank you very much for that. We've hit the hour, so it's time to wrap up. Thank you, Amrik and Will, for providing us that background to Contemi, where you are in the market, some of your views on some of the trends, much appreciated. This webinar is now recorded, so we'll be able to distribute it. And thank you for those that are listening. And yeah, thank you again, guys. Hopefully we'll get the chance to speak again soon.
Thanks, Stephen.
Time for us to sign off.
Will you be playing us out with that guitar in the background there as well?
No. If you want to hear something very painful, yes. If you want to have a peaceful rest of the day, no. Well, thank you for that. And
thanks very much.
Thank you, Stephen.
Thank you
Cheers.
both.
Cheers, Stephen.